On today's episode, we're talking everything about Budget 2026.
I present the budget for the year 2026-2027. Scaling up manufacturing in 7 strategic and frontier sectors.
What are the changes that the government is looking at?
10,000 crores SME growth fund, high-speed rail corridor, tax buyback or shareholders.
How is it going to impact you? Are you going to be paying extra taxes? So all of this will be discussed in this special episode. And joining me today is Mr. C.A. Nitesh Buddhadev and Mr. Firoz Aziz, who are going to dissect everything that Nirmala ma'am talked about for the last 1 hour in the budget. So let's start with you, C.A. Nitesh. I want to start with the common man.
Sure.
I'm earning 1 lakh rupees a month. Is it even worth watching this video for me? Right? Let's just start with that.
So honestly, nothing has changed on the income tax per se as a layman, but still you should watch this video because there are some indirect changes which will impact you, even though you are earning just 1 lakh.
Okay.
Because you are not just earning from your salary, you are investing in a market, you are investing in a mutual fund, some or other way, this budget is going to impact you.
Okay.
So we were not expecting too much from this budget. So that's a good news. Nothing much has changed. But because in 2024 July budget, whole capital gain has changed. Last budget 2025, up to 12 lakh, there is no tax, has maintained status quo. So I'm not paying any tax if I'm in the new regime up to 12 lakh rupees. So nothing has changed on that say. But there are few changes which affects me indirectly. Like if I'm traveling abroad,
Okay.
and I buy a holiday package,
Okay.
I need to pay TCS.
So I'm planning to go to Japan 2 months from now. And
Okay.
let's say I'm spending 10 lakhs.
Right.
So what is going to change now?
Right. So till now, you have to pay 5% TCS if you are spending till 10 lakh on a foreign holiday package extra. That 5% TCS, which you are paying extra, is though that's not a tax, but it's a outflow, additional outflow, which you are paying from your pocket.
Okay.
That has reduced to 2% now, the TCS
Okay.
from 5% to 2%. And if you're spending more than 10 lakh, Sharan, that was 20% TCS.
Okay.
That has also reduced to 2%.
Oh, wow. So it's full blanket 2%,
2%
for all my expenditure
on the
On
abroad
travel.
which you are traveling.
abroad travel. Okay.
That's one of the good change
Okay.
from the cash flow perspective.
Okay. So, Mr. Firoz, you are the joint CEO of Anand Rathi. And after watching the budget today, what is your opinion on what the government is thinking?
Oh, government is thinking a lot of things, Sharan, and they're thinking consistently.
Okay.
So I'm looking at the budget and saying, yeah, they're trying to do stuff which is very long-termish in a budget when there is a tax rebate given up to 2047 for a data center or iCloud services. I'm thinking the government is actually thinking long-term.
Okay.
Will they execute long-term is a separate matter, but I have not seen government speaking that long.
Okay.
For tax rebates and meaning it, right? You see that iPhone assembly lines, the ones which your viewers might be using as we speak to see it.
Yeah.
Now there are 2 assembly lines which are so large in Tamil Nadu, in Hosur and Sri Perumbudur, which export $23 billion of iPhones.
Okay.
Why did iPhone suddenly start in 2017 making an assembly line in India? Lakhs of people are being employed in that. Miles and miles of assembly line. So was there something like that done? The answer is yes. Will the market find it positive today? The answer is no. We are 300-400 points down on Nifty today. The reason is, so they're consistent, they're macro, they're consistent even on direct tax.
So, Firoz, what you're trying to say is that the government is coming up with changes for the long term. But is there any specific reason why in the short term the market has taken a beating? Like, why is the market falling today? Like, what was the public expecting, which was not met, because of which the market is falling?
The answer is very clear to this, actually. Very, very good question. Why is the market falling today? Because there are 3 indicators in the budget which say that we are going to be an investor's market and not a trader's market. Those indications really makes at least one segment of the market upset, right? Yeah, I'm a trader. Mujhe kyun chhed rahe ho?
Yeah.
But there's a message that there is going to be investor-based decisions rather than trader-based decisions. What are those? Derivative, STT has gone up from 0.02 to to 0.05.
No, you mean derivatives FNO, futures and options?
Yeah,
trade.
futures and options. Futures STT, security transaction tax, has gone up,
Okay.
which is generally a trader's instrument more than an investor's instrument. One.
Right.
You used to get a set off on interests you pay on borrowed capital. Okay, when you borrow money, then
Great.
invest in stocks,
Okay.
right? Then you get an interest on the borrowing.
Yeah.
That had certain deductions for in the form of dividends. If you get a dividend and you have interest, your dividend taxation would come down.
Okay.
They've made that non-deductible now.
Oh.
So again, telling you that you want to borrow and invest and trade, I'm not interested in you being in the capital market.
Mhm.
Third, your options STT has also gone up,
Okay.
right? Buyback taxation, my promoter is at a disadvantage, investor is at an advantage. So when everything which has been done, I'm giving you a few examples which are top of mind, which indicate that India is going to be a investor market as against a trader's market.
Mm.
It will definitely spoof the trader fraternity, and the trader is who reacts on a Sunday.
Mm.
Investors not even opening his terminal because of the budget,
Right.
right? That's why you see volumes are very low today.
Right.
Volumes are not high because it's a Sunday with the trading market. That's one reason. So long term, I'm positive. Economy, it was great. But traders will definitely be one set of people who will move out, and that will create some buying opportunity for the guys whom they need to hand it over to the share to the investor.
But so I wanted to ask you, Nitish, he mentioned that the STT has gone up. So exactly, can you give a example or a case study
Sure.
of how much additional tax a trader is going to pay now? Because the market is reacting so badly to that. So is that really a big impact today?
True. I completely agree with Firoz, because if I am an institutional trader, that's going to be a huge additional of cost. When I say 0.02% to 0.05%, okay, on sell of futures, as an individual, if I'm doing a 1 lakh rupees of trading, that was till now 200 rupees, has gone up to 500.
Okay.
So not much of change to me,
Yeah.
though it's more than 150% change if I say from 0.02 to 0.05.
But the starting number itself was so
Yeah,
small.
because it's 200 to 500. But if you see at the traditional, it's institutional level,
Okay.
that's a huge cost. So the one aspect,
When you mean institutional level, you mean like at a level of what kind of a company?
I'll just give you an example. So let's say we are a big proponent of investing into arbitrage fund.
Yeah.
But now arbitrage fund will get impacted. The return in arbitrage fund might get impacted. Why? Because they buy in, let's say, future and have a position in the cash market. So they try to take the benefit of the opportunity of that arbitrage. But the cost has increased now. So the return henceforth, you will see get impacted in the arbitrage fund.
Interesting.
So, but as in layman, if somebody is doing as a retail level also future and option, not too much impact, because as I told you, per 1 lakh, 200 to 500. If I go a bit ahead and if I tell you about the options also,
Okay.
it went, it rose from 0.1% to 0.125%, which is per 1 lakh, 100 to 150 on option selling. If I'm exercising the option, it was per 10 lakh rupees, 1250, that has been 1500. So honestly, as in retail trader also, you are not impacted. But of course, 91% of the people don't make money on future and option.
Yeah.
That's one of the reasons you should not be investing or trading into future and option. But yeah, at institutional level, this will impact a lot in terms of cost.
So Firoz, he mentioned an interesting point about arbitrage funds, and you're in the wealth management space as well. Any other changes that you feel, like any mutual funds, because there are thousands of options, any mutual funds that is going to benefit from this current budget because of the specific measures taken by the government? Can you share some light on that? Any specific categories of mutual fund that's going to do well versus doing bad?
Yes, I think equity category, which was grappling with the FII exit.
Yeah.
What was I looking for in the budget?
Yeah.
Can it destroy the cult of Indian equity investing in mutual fund
Yeah.
at all? Because you're getting 31,000 crores of SIP. See, last year, 1,66,000 crores of FII selling happened.
Okay.
DII bought 7,60,000 crores. In spite of doing so much sale, FII was just 20% of DII purchase. If this DII purchase stops, then all hell will break loose. So what I was looking for is, does it spoof the Indian retail investing in mutual fund? That has not happened, thanks to the Lord. 5-6 lakh crores of...
How could that have happened? What
That
was
could
it?
have happened if there was a tax change again, because 12.5 was not a great round number.
Yeah.
And Sanjay, who's now the RBI governor, I think I had heard him say that we will make it to 50. That was the fear. Of course, when comes
Was
to,
that a real fear, according to you, this budget?
because last time there was some inconsistency when they made it 10 to 12.5. There was one person from the ministry who said that this is the end, this is the stop, last station. One guy said this is not the last station, I'll bring it around. That could have been one of the challenges.
Okay.
And the second thing which makes me feel that mutual fund categories like arbitrage is definitely going to be a deterrent.
Yeah.
But arbitrage is going to be something which will anyways not create too much wealth for me. 6.5 बनने का 6 बन गया. ठीक है यार. Wealth कहाँ बनने वाली है? 15%, 15% compounding की probability बढ़ाने पे हो.
Yeah.
So that I'm reasonably confident that equities, especially small caps, now if you ask me.
Yeah, because that has been a point of discussion that small caps have not been performing well. What's going to happen to it now after the budget 2026?
One thing which happens beautifully, which is the nuance, it's not visible to naked eye, and your viewer might just miss the benefit of buyback taxation. Buyback taxation is not something which is a great tax benefit, but it is a trigger for a behavioral change in the boards of companies.
Okay.
What do I mean by that?
But first, can you explain what is this buyback taxation? Because the common man doesn't know what this is.
Okay. Now I have to first explain what is buyback.
Yeah.
See, when there is a company which is a listed company, like ours is a listed company.
Okay.
Okay. We are like in this NSE small cap 250, we are the 27th weight out of the 250.
Okay.
So we are reasonably large in the small cap category with 25,000 crore market cap.
Which is Anand Rathi.
Which is Anand Rathi Wealth Limited, which is whom I represent as a joint CEO. Now what happens is, let's assume my profits, which I've been projecting for this year, is 375 crores after tax.
Okay.
Okay, I finished my last result. Came to 280, 290. With God's grace, if I do 375 crores of profit, now I have a choice. Should I distribute this to my shareholder?
Yeah.
Or should I retain it? Generally, people will distribute some portion, retain some portion.
Okay.
Now, if I want to distribute 200 crores of this, I can give a dividend.
This is called dividend.
This is called dividend. You just pay. You don't have to do anything. The shareholder who has one share will get,
let's say I own one share in your company.
Correct.
How much will I get if you distribute?
Let's assume I give 7 rupees dividend.
Okay.
In the first.
Okay.
So you would get 7 rupees. Sharan will not even have to act. He will automatically get 7 rupees in his bank
account.
Yeah.
Correct?
Yeah.
Now, second way of, now in that Sharan will have to pay, add it to his income and pay the tax.
Which could be anywhere between 30 to 40%, depending in my.
With your amazing income.
I give
it. She will make a 60% bracket for you. Well, God's grace. Okay, coming back. So dividend के लिए Sharan को कुछ करना नहीं.
Yeah.
Wait करना वो आ जाएगा dividend. The other is a buyback. Let's assume Sharan has 2 shares.
Okay.
If I offer a buyback of 100 crores,
okay,
Sharan will have an opportunity to surrender one of his shares to me.
Okay.
And the company will use the company profits or reserves to buy out Sharan's one out of the 2 shares.
Okay.
So what happens? Sharan does not have to sell his share in the market, can sell his share to the company.
Okay.
So what happens? Sharan's supply didn't go to the market, but Sharan's supply came to the company, and company's profits were used to give you a liquidity. That implies that the number of people going and selling in the market will reduce. And in turn, the share price becomes more stable.
How does it become more stable, the share price?
Okay. Now, if I didn't give Sharan an opportunity to surrender his share to me as a company, what will he do if Sharan needs money?
I'll sell it in the open market.
Open market.
And open market, anything can happen.
He has to find a new buyer. Now, 100 crores ki, if somebody is doing a buyback, then everybody is surrendering 100 crore worth share to the company rather than selling this 100 crores to the market.
So you can define that price.
You can do that. There are 2 ways to do buyback. A company can do a buyback and then do open market buyback. Then it will tell Sharan to sell in the market and buy it in the market.
So what is the advantage for me as Sharan?
The other share which he owns will have a better price. Okay? This is a little more nuanced thing.
So what about the taxation for me? Earlier it was 30%.
It was 30%. Now it is 12.5% because Sharan is not the promoter of this company. If you were Mr. Anand Rathi, the tax would have been 30%.
Okay.
If you were if you were a promoter company, it would be 22%.
Okay.
But neither are you a promoter, nor are you a company who is promoting this company. Your tax will be 12.5% if held for greater than 1 year, which is a great thing.
Okay.
They've graded types of investors. So every investor should be happy, retail investor, that now my buybacks frequency will increase, my taxation will reduce. If frequency increases and if I don't even participate in that buyback, that means that company is buying out its shares, which is a very good positive sign. So now how does one trader derive a strategy out of what I just said so that it does not remain academic? You can look at all the NSE small cap 250 companies which have fallen the most.
Okay.
Look at their balance sheet, who has got maximum cash.
Okay.
Those are the guys with the higher probability to announce a buyback.
Because they want their share to go up.
Or they want to distribute it, and now they've found a very efficient method to distribute this money cost effectively to a common shareholder. If my love for my common shareholder is high, and if I have hundreds of crores staying in my balance sheet, and the government says, no, tu baat le paisa, unko itna tax nahi lagega, I'll be very happy for my shareholder who has supported me to bring me to this market cap. So that could be a high probability event. So you can use analytics to find out which are the 250 companies.
Is yours one of those companies?
I can't say right. Sharan, there will be another tax on me then to be flouting the rule of governance.
So, Nitesh, now
I would like to contribute on the same side that if I am that retail person and I am doing the buyback, how it would be taxed.
Okay.
So I'll give you an example. Let's say currently, if I offer any share for the buyback, let's say I have bought it for 2 lakh and now the value is 3 lakh rupees and I'm giving it a buyback. On 3 lakh rupees, Sharan, as of now, I have to pay, as per my tax bracket, 30%, I have to pay 90,000 tax. On whole buyback amount I'm getting. There would be some element which is my cost.
Yeah.
But on the whole buyback amount of 3 lakh rupees, I have to pay 30% tax. So it was that bad.
Okay.
Or if I get a dividend, on the whole dividend amount, I have to pay 30% tax. There is no change on the dividend. But like Firoz mentioned, why the more and more company will now go for the buyback? Because it's win-win for both promoter and as a investors, as a shareholder, right? So what will happen now in the same case? Okay, let's say I'm giving a buyback of 3 lakh rupees. This is applicable by the way from 1st April 26.
Okay.
So from 1st April 26, if I go for a buyback, and let's say the buyback price I'm getting is 3 lakh rupees, and the cost of my that particular shares are 2 lakh rupees. So I have to pay capital gain only on 1 lakh, and not only that. That's consider that as a long term. I'm holding for more than 12 months, and then I'm offering this for a buyback. So I will pay 12.5% tax. Not only that, you know that in my long-term capital gain, I don't have to pay tax up to 1,25,000 per person per pan.
This exemption.
Exemption, right? So if I give in this example, 3 lakh rupees is a buyback value, 2 lakh is my cost, so 1 lakh is my gain on this buyback.
Right.
On that, I will pay 12.5%. But if the total gain during the year is less than 1.25 lakh rupees, there is no tax. So again, this is a win-win and it's a great change, I would say. Though people are not anticipating how big it is, you will see next financial year.
One doubt I have. Earlier, company was giving dividends, right? Meaning I was still holding the shares, and I'm getting dividends,
right?
But now when buyback is happening, I have to sell the shares, no? Because the company is buying it from.
Of course.
So, what if I don't want to sell the shares? Like I just want the dividend. Then how do I do it? Because I have to give up the shares. What if I'm further expecting more capital gains on these shares?
So whenever you typically see the buyback, that always comes at a better price than the market price. So I can even do the buyback, and after a few months again I can acquire the share if I want.
Okay.
So that's the good thing you can do about managing this buyback. And like Firoz mentioned, that example he gave, when there is a less shareholder, my per share income will go up. So that's also anyway beneficial, even if you are not acquiring new share, the existing shares which you are holding, because you are not giving all the shares in the buyback. You are giving few of the shares in the buyback. So the remaining shares, market price can also increase. So it's a very good situation in case of buyback.
Interesting. Very, very innovative way of sort of protecting both investors as well as the promoters. So gold and silver has like corrected by almost 10 to 20% in like a single day.
True.
So is there anything that the budget has now announced which will allow me to sort of optimize my reinvestment strategy into gold and silver? Anything that you can shed some light on?
Sure, Sharan. In all the budget, when you see the fine print, there is always some googly.
Yeah.
Why I'm mentioning that? When I was reading few of the fine print, I came to know about the sovereign gold bond, SGB.
Yeah.
And we have promoted quite a lot. When I say promoted, we always encourage people to get into the
In
SGB.
the last 3-4 years, you've
Yeah.
been saying this. Yeah.
The reason, Sharan, it has changed drastically, and that's bad for investor, is that you know that, let's say, let me give an example. So that would be more clear to all the listeners. Let's say you have got into SGB from the government when they announced, the RBI has announced, and you got some SGB.
Okay.
And now you are going to any online platform, Zerodha or Grow or something, you are going and you are selling it.
Okay.
Now, when I buy it, okay, you have to pay capital gain tax, no change in that. But now if I buy and I give it on redemption to the RBI, for me also tax is exempt. I repeat, when I buy in the market from a demat account, SGB, and when I sell it or redemption with the government, I also don't need to pay any tax, even though I just stayed invested for 2-3 years.
So just to summarize,
Yeah.
SGBs usually say that you have to hold it for 8 years
Right.
to be tax exempt.
Right.
Now, if I have to sell it before 8 years,
Right.
that's where I go into the secondary market.
Perfect.
I'm not selling it to RBI, I'm selling it to you
Yeah.
because you're waiting to buy.
Right.
So if I sell it to you, if I hold it for 5 years, for me also it's tax exempt.
No,
There's another.
you have to give it to government only. Then only it's tax exempt.
But
That's
what
the
about the
current-
5-year thing?
No, you get a long-term capital gain. You have to pay tax on that.
Okay.
Okay, you pay 12.5% tax because you hold for more
I
than.
thought there was that 5-year threshold
No,
also.
that's 5-year threshold. If government is asking you to surrender it before 8 years,
Okay.
after the 5 years, there are few tranches where they
Okay.
can ask for the early redemption.
Okay.
So
But if I do it in the secondary market, then I
Yeah.
have to pay tax.
yeah, you have to pay. So nothing has changed for you. But now, why will go when you want to sell? Why there are buyer? Because as a buyer, if I go and buy it from you or from any other in the market, for me also, if I stay invested till the remaining period,
Which could be 2-3
2,
years.
3 years, anything.
For
For
you,
me,
tax
it's
exempt.
also exempt, right? That has changed in this budget. So from 1st April
Oh.
26, I go and surrender at the redemption to government,
Okay.
and I have bought it
When you mean government, RBI.
RBI
Huh.
because they will ask for the maturity when there is a due after the 8 years. And
Right.
let's say you have invested for 5 years,
Okay.
and remaining 3 years is with me.
Okay.
So for me, it's also till now tax exempt, but from 1st April 26, it's changing. So I have to pay tax on that because I'm a secondary holder and not the primary holder.
Oh,
So
they
that's a
changed
big
this.
change. So from tomorrow onwards, I think SGB will have a less traction. That's a big thing. Why? Because nobody want to buy SGB now because there is no benefit in the buying in a secondary market from the demat.
So even if I buy it now,
Right.
before the new rules kick in,
Right?
but if I sell it after,
Still, I will not get. Why? Because that law is getting implemented from 1st April 26. So if I already holding in the secondary market, which I bought, let's say, a year back from this or demat, okay? And now before 31st March 26, there is redemption opportunity with the government.
then I
Then-
can save tax.
Perfect.
Only after that.
Roll. Right. So now I am expecting from Monday, which is tomorrow onwards, which is from the next day from the budget, the liquidity in the SGB, once people come to know, should dry up.
So, Firoz, I wanted to ask you this because you are somebody who is also responsible for understanding which sectors to invest in next. So, based on what the government has said now about the current capex, where is the market going to move the most in terms of sector level allocation? For you, how would you look at it?
I'd say if you look at, I've been saying ABC, which is auto, banking, and consumption. Of course, the infra spending has gone up by about 8-10%. Do I see a material change in infrastructure stocks? The answer is no.
Okay.
Infrastructure as a sector is not done too well.
Okay. Auto has done really well in the last
Auto
2
has
years.
done
So, will that continue to happen?
To my mind, yes.
Okay.
Now coming to which are the sectors of the future? How do we identify whether the sector is good and not chase your own tail? Generally, a heart says buy something which is doing well.
Yeah.
Like people are screaming, buying silver, gold, right?
Hmm.
Without realizing that it is in the hands of an option trader sitting in Chicago Mercantile Exchange.
Yeah.
So we always have this tendency of arranging performance in the descending order, right, which is the highest performance.
Hmm.
Let's go by that.
Huh.
But ideally, you have to put it in the ascending order. The smallest performance first. Then you will see the worst performing 3 sectors in the last 6 months. Worst performing.
Huh.
Very difficult to buy any of that. It's
Huh.
not. It's easier said than done.
Huh.
But at least in an Excel sheet, you've not put in money. At least arrange them in the ascending order rather than the descending order. Then look at the top 4-5 sectors which have done worse. Then you start waiting for their turnaround. How do you check whether any of these 5 have started doing a turnaround? this is my method, my company's method, right or wrong. Okay, most often than not, 90% you go right. You look at that subsector across 2 quarters and see, let's assume the quarter 3 results are coming. Like you said, IT.
Yeah.
What I'll do is I'll list down the Nifty IT has 10 companies. Only has 10 companies. I'll list down these 10 companies. Look at if there are any bad results, making sure still the stock is going up. That's a good turnaround story of a sector. Why does it happen? Common sensically. If a bad result is still not pushing the share down, it implies anybody who was owning the share for the short term has already quit the share. Only long-term guys remain now. When you know that all the short-term guys, these active FIIs, very, very short-term, they buy and sell like minutes. If those guys are not there in the share is when a bad result will give you a share price movement upwards. If out of these Nifty IT 10 companies, 4 or 5 companies showed this attribute, then I know this, it's at the cusp of a turnaround. Will the turnaround happen in a quarter or a year? You don't know. Like auto, I have saying for the last 5 quarters. First 3 quarters, anchors taunted me so much. Firoz, tu auto mein baith ke nikal jata hai. Itna auto mein, itna you're saying auto. It took 9 months for that call to play out. Then auto was one of the best sectors for the full calendar year.
Now, if you see that descending order,
it'll come right up or somewhere close to it.
Yeah.
So that's how we spot a reversal trend in a sector.
And just one last thing, based on what the government has said now in Budget 2026, is there any change in the way you're looking at the different sectors? Because I think defense budget has increased, for example, right? So any of those sort of indicators that you're going to look at now, which has probably changed the way you look at the sectors?
Yes, I think defense defense, unfortunately, as a sector is so diverse in terms of you think that some of the stocks are so frothy. Some of the stocks have reached their coffee level, not the froth level. So defense has to be bottom up, not top down, even after today. Rail and railways associated stocks are not so frothy. Okay, I don't want to mention stocks because I'm not qualified to.
Yeah.
That's one space where it's good to fish there. That's a pond you would like to fish in. Then you look at sectors like cyclical sectors, especially with representation in Nifty. Okay, cement stocks. Some cement stocks will do phenomenally well, in my belief, especially if they are in Nifty.
Okay.
What is happening to Nifty stocks is, today NPS also has a 14 lakh crore AUM. EPFO has so much AUM. When equity allocations of these two indirect entities of you and me is going into equity market, it is going into 90% into Nifty. So if I like a sector and if I like a stock, between two stocks, if it is in Nifty and not in Nifty, I will not look at management. I will look at who is going to get the tailwind of liquidity as against the headwind of FII outflow. Okay, a little more profound for it to be comprehended in a shorter span of time. But that's what that's.
So what else is there, Nitish? What is going to affect the common man?
There is another big change which people are not noticing because this is on the compliance side.
Okay.
Now, in the economic survey released before 2 days before the budget, government has quoted few number.
Okay.
In last whole year, income tax are giving nudges to income tax payer that if you have not disclosed your foreign asset, disclose. If you have done fake political donation, disclose. If you are claiming fake HRA, disclose. And it's not just a random nudges.
So basically, if I have a house in Dubai, or if I have donated to BJP, or if I have what is the last thing?
The wrong claiming or excess claiming of your house.
So make some fake receipts for my rent from some shop. Then what happens?
Now I have the concrete number. How much tax already collected by this nudges? Because when the nudges came to the respective assessee, people started going and submitting the real data. So the foreign asset campaign promoted nearly 25,000 taxpayer came forward and shown 29,000 crore of foreign assets that they were not disclosed earlier that they have disclosed.
Wait. Repeat that number again.
Right. 29,000 crore of foreign asset disclosed after the nudges
By
government started.
25,000 people.
By 25,000 people. Not only then, more than 1,000 crore of income people disclosed because of this nudges, foreign income.
Okay.
So you have some dividend income, some income from capital gain, selling NVIDIA and all that thing. Now people are disclosing because government income tax is sending these nudges.
And these are people living in India,
right?
Having all of this income in other parts of the world.
Perfect.
My God.
Second point.
So many rich people are there.
Second point. Fake political party donation.
Okay.
91,000 taxpayer. This is government data by the way, Sharan. Okay.
What is this fake political donation?
So people get exemption of 100%. If you donate to some political party, okay, that you can claim 100% an exemption. So you are donating 5 lakh to any political party, registered political party, whole 5 lakh you can claim exempt. Okay. But this is a whole black money is rotating in the system. How? This is not a kind of a legal transaction. Somebody donate 5 lakh rupees to a political party. After deducting some percentage.
So let's say I have a party called Hegde Party. And you donate 5 lakhs to me.
Right. You're a political party, registered political party. Yeah. If I donate 5 lakh to you, and that political party is giving back that cash.
Oh, I'm giving you back the cash?
Cash by deducting certain percentage. Because this political party has so much of cash income. They want to turn it to white. So this is whole kind of black money things going in the system.
But the party is involved in this also.
Few small political parties, right,
are involved in this.
So
this is like the government's way of sort of punishing those people who are giving these fake donation to these smaller parties.
Right.
And these smaller parties are benefiting from this setup.
Right. So
it's a way of defeating the competition through legal ways. I like it.
So approx 91,000 people came forward and said that, okay, we have shown it fake or by mistake we have shown and all that
by
thing.
Mistake, okay.
So that excessive deduction is worth 2,050 crore and the tax collected on this is 680 crore till now. And the third, but not the last, 119 crore tax collected because people claim fake HRA. So now, what is the change in this? Why we are discussing? Okay, these are the number people should know that income tax is behind you through various sources they have. You have a choice. They have some 6 month of period that you can disclose your foreign assets. If you're not disclosed till now, they've announced certain measures that you have to pay 1 lakh rupees of some penalty and disclose up to 5 crore of the any kind of assets you have in the foreign.
Okay.
And you have not disclosed till now. Pay 1 lakh penalty and disclose now. This is your last chance.
But how will they get to know if I don't disclose?
They have various sources because now various government share database.
So if I have a house in Dubai,
yes,
and if Dubai government can tell Indian government that Sharan has a
yes.
mansion in Dubai.
Yes, because
they'll tell.
Yes, this is how the various nations are sharing their database.
So I need to tell this to somebody now.
Yes.
What else?
So another few compliance changes. Your TCS, as we have discussed, has reduced. If you are sending money abroad for your children education. Or you are going, so now that has reduced from 5% to 2%. Either you are spending on the medical needs abroad. If you transfer more than 10 lakh rupees up till now, you pay 5% TCS.
Okay.
That has reduced to 2%. More than 10 lakh if you are transferring for either a medical reason or education reason. So there was a 5% TCS that has reduced to 2% now.
Okay. What about me going, I want to invest in Google, NVIDIA, and I have an app where I can invest in US stocks. And let's say I want to invest 1 crore. Earlier, I had to pay 20 lakhs extra as TCS. Is that reduced?
Bad news is that nothing changed in that. If you are investing more than 10 lakh rupees or transferring for all these investments abroad, you have to pay still 20% TCS.
Oh,
and there is no change because...
So no benefit for me.
No, government either way discouraging that don't put so much outside. Anyway, rupee is depreciating.
That's why I'm sending it outside.
But you cannot do that. But of course, if you are paying TCS, that's not additional tax. You can adjust against your advanced tax. You pay advanced tax, a good amount of advanced tax. You can adjust against that.
But still, I have to wait for 3 months.
Yeah.
Okay, fine. That I understood. What else?
And last but not the least, again, because every time you know that when you want to file your return, government sites hangs. Typically in last 5 days. So I think there's some workaround now by government. If you are filing ITR 1 and 2, your due date going to be 31st July. If somebody like you and me filing ITR 3, because we are business and profession, that has shifted to 31st of August. Instead of July, you get 1 more month from this year onwards. When you go and file return for financial year 25-26 in July 26. So for you and me, because we are filing ITR 3, the due date is 31st of August instead of July. But if somebody is only salaried and having capital gain, who are filing typically ITR 1 and 2, the due date is 31st July only. So bit less load on the government website maybe.
Okay. No, but I think chartered accountants have to work for 2 months.
Now, no, for that, for whole year. Why? Because if you are a partner in firm where there is no audit, 31st August. If you are with audit, it's 31st October. And then there's a transfer pricing who has this foreign kind of transaction, transfer pricing thing, 30th November. So you have 31st July, August, October, and November.
So that's it. That's what the budget said this time. So that's it. Nothing else. No income tax reduction. And
Government has given a lot in last 1.5 years, Sharan.
But I wanted more. I am tired of paying 42% tax. Nothing for me.
Then you should plan your taxes.
Plan my taxes. Income tax, sir. Income tax, what do I do?
Yes, you can plan your taxes and you can reduce that. Though government has not given a lot, but you can go to a good CA, go to a good edtech platform and learn about taxes, how you can
I
save
think
tax.
I'll just keep my salary zero and I'll keep the money in the company. All right, guys. Thank you so much for watching till the end. That is Budget 2026. Would love to know any other question that you want us to answer in the comment section below, which you felt like we did not answer. And please share your own thoughts about Budget 2026. Anything that you felt like could have been discussed better, happy to hear your thoughts as well. On that note, guys, I'll see you in the next one. Before you go, guys, if this episode gave you even one insight that made you think differently about money, don't just keep it to yourself. Share it with your friend or family member who could use it too. And if it sparked a new thought or even made you disagree with me, drop a comment below and tell me why. Your critique helps me make these conversations sharper and more useful for you. As long as you have me subscribed, I'll make sure that you walk away with at least one new thing every Wednesday.